Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Monday, December the 16th, 2024. The NASDAQ is where I'm going to start today, and I'm on my hourly chart, and anybody who was there in the market today was likely going to agree that the NASDAQ decided to do a secondary moonshot and just climbed into uncharted waters pretty quickly. Getting the market getting itself above 22,000. Now, granted that also, even if you're still in the December contract, it also went over 22,000. So just the fact that we started over 22,000 or higher up, um, because of the contract roll, and like right now, you'll see that the Thinkorswim has rolled out, so we're on the March contract. I've made the adjustments to the levels so that there, so that everything is in its right place, and made the adjustments to the fibs so that we now have still our upside levels. The only one that hasn't changed is this one, which was for the intermediate wave 3. And I removed we had a lower level and we'd exceeded it, and now we really exceeded it. So I removed it and moved it up to the next level. Now I do want to actually put in, so we still have got, I got to get back out to my weekly, and I forgot to put back in my minor. And so where we're at with the minor is also pretty high up. I'll go 618 and 3.618. I'll even put in a 4.236 just to see where that shows up. And so I got 2.618. I think we're probably above that one as well. Okay, so actually, I'm definitely not going to need these. Let me rearrange this to 2.882 and take that guy off. There, that's a little bit cleaner. Okay, so starting over, let me go back down to that hourly chart. And so I have one more. For some reason, what didn't kind of come through was for that minute. So one more to stick in there. And I think because I just took them off based on the fact that I was going to replace them. And so we're going to go in here. I'm going to take away the 0. 618 has been exceeded, I believe. Yeah, right up there, and we went above it. So it leaves us to the 1, and this is in the minute. So here. I always think I make these double checks before I actually hit the record button. But obviously, I miss things, so I apologize. So back to the hourly chart, definitive moonshot. And I just want to see, because I want to look at it versus having, let's turn that off and put this all on the left. And it's just not going to get out of the way. So I am actually going to take this off for right now because I want to show it. This was pretty dynamic in a rally today. Again, courtesy of Tesla, which even after hours managed to climb an additional 4 points, or $7, and was trading above 470, slipping back below as the futures market is done, and now we've just gone into waiting for Globex. So the market's come back down a little bit. Now, we saw some decent moves in Apple Computer. We saw some decent moves in Tesla again. Microsoft, there was another one. Google was actually gunning for 200, and I think that still might be the case. Now, my point in just reviewing where all of this activity, Broadcom today was hitting 250s, now hitting 250. And so that has actually climbed up into the upper echelons of the Max 7 in terms of value. This is a capitalization weighted index. And so with the stock price being so high, now Broadcom is up there along with Nvidia and Apple and all the balance. And I think it's number 3 actually now. And so, and Tesla, I think, has overtaken Apple at its current evaluations. So this battle is kind of going on in these Mag 7 stocks, but it continues to really push the volatility. And I'm not referring to the volatility as measured by the VIX. I'm talking about the volatility that's measured by the options flow, by the options movement, by the intensity of how many contracts are trading. And being that this particular expiration, which is coming on Friday, again, it's the quarterly, it's the monthly, and it is the heaviest call weighted expiration that we've seen. And so I am expecting this volatility to last pretty much on that basis, that even to unwind a lot of this, if that was going to be the case, it could really just detach this market from a lot of things and produce moves I don't think people really want to see. But let's just say that we go through expiration with the vol being here and with the heaviness on the call side, up and down, heavy. And these moves in stocks like we've seen in Tesla in particular, you're getting now, we're talking like the stock trading at 470, which makes the 400 strike very, very rich in terms of premium. But I'm sure there's not, well, let's just go take a look so we could see that what we're talking about in this. Now we're just going to go to the December options, right? Stocks trading has gotten high. This says 463, but I know it's traded 470 because I saw it. So what we're dealing with is the big number right now. Where the focus is, it is the December 20th, the 500 strike. So when I saw trading at 470, I'm like, well, God, they got 4 days to tack on another $30. And today they had it above up 27. Or no, excuse me, up 30. So, again, this is not an impossibility, but it is just the stock trading 111 million shares, almost 112 million shares. The options volume just pretty much being, look at this. The 445s, look at this. These are huge. This is huge volume. Not as big, let's say, as what we've seen in the spiders or what we can see in the Qs. But it certainly has a standalone. And the volatility is almost at 85. So that's the volatility we're talking about. It's the volatility that shows up in these options as premium, what traders are willing to pay, and because it's becoming a one-sided market. So in other words, as a dealer, they're going to ask for more quote unquote premium because the stock is moving all over the place. And each time they're selling a big chunk of, say, the 500s, even at $4, they got to run out and get that stock. And they have to be pretty much, if somebody's coming in and buying 500 of these calls, that's, a lot of stock that you got to get when it's two up or one up type of a market. So in any case, that's the volatility that I'm talking about. That volatility just pushes this market to the moon because of, again, the nature of the trading is that we're seeing heavy calls take place. And I mean, I can go over again, we can just go to Apple and we can come down and we're looking at for Apple, and this is on a not that bad of a volatility, but it's higher than what Apple normally trades at. So yeah, on the 250s, which we got above today, we had 60,000, 67,000 in the 252 and a half, 42 in the 255s, and also, but it has a fair amount of puts also trading. And so you're seeing that either they're just dumping out or they're buying in because they're just to kind of do whatever they do. But a lot of calls, a lot of calls. And then we can go to the main ETF that we have, and we're talking, these are, look at 136, 168, 158. These expired today, by the way. So, there's large day volumes on the 0 DTEs, but we can go out to the 20th and it's not as high. So the Qs are picking it up on a daily basis. But so that expires and it just kind of propels the market in its own little world. But these are huge moves in the Qs as well. And again, also new all-time highs. So everything seems to continue to go on track. What is really continuing to be astounding is that truly, when we got above this level, which was 22,202, which I believe we opened above that level, it's in outer space. It's in this big black hole. Because why? Because we just really don't have any resistance points to hang our hat on because the market's never been up here. So truly, on everybody's case, it truly becomes a product of Fibonacci relationships, Fibonacci levels. So we're using percentages of different types of moves. In my case, I'm using what I've been taught in terms of I'm looking for a minuette fifth wave, and I know to connect one over to the bottom of 4, and then it gives me levels going up. And then I had 1 to 2, so I can use that same methodology to work in and think about what 3 would begin to look like. Now, here's something that I will add. I believe that we have, as I spoke about, a diagonal fifth in progress here. And then we're having another diagonal in the minuette degree, but it's minuette 5 of minute 5. So minute 5 is also a 3-waver. And so minuette wave 5 will also be a diagonal. And it's just truly, now it's just soared right out of the top of this diagonal channel. So it's getting really blow off. Yeah, I think so. Now, there's all kinds of people that just going to say, well, you don't see how or what's going to stop it. It's like, well, then you kind of have to ask the same question. What's sending it higher? What's propelling the market to put on that many points in uncharted territory? Now, what is propelling the market to come in and push Tesla up 80, 83, 84% since November the 5th? So, a month or so later, and this thing is just like up massive amounts. So we've got a lot of different factors. Now, what I will share, and again, it makes sense, because the coming expiration on Friday, December the 20th, is so heavy call laden. It's just call gamma. That's what's sitting there. And when these options expire, it releases the gamma. So what is expected usually after that, right? Because delta's gone, the gamma's gone, the market will sell. We get a spike in volatility and the market usually will sell. Now, how heavy, how hard? Because what truly happens when you get all that settled out, you're going to have a lot of people that are like, oh boy, they're really long or whatever. So just the whole exchange is going to be something different. But as I have said, it's unclear to me whether the volatility, I believe, will go through Friday. But is that going to be enough that once that expiration and the size of that expiration will force the market to just make its own adjustment then? Or does a lot of it get rolled out? And either they're rolling it out to the end of the year or they're rolling it out into January. I don't know. But I do think that that a lot of it is all to do with this year-end posturing. I think that a lot of it is algorithmically driven, particularly like in Tesla. I mean, you're going to read stories. It's like, well, investors think that stock is underpriced. It's just like it's worth a whole lot more, and it's like, really? So that's the reason why they're willing to pay, 475 or 470 for a share of Tesla. And it's like, I don't think so. I don't think that's correct. I think that investors are standing back as well as we are, but at the same time, traders are cleaning house. Even if you're just an options trader for the day, look at this move today in Tesla. It's like, yeah, you're going to go in there, you're going to trade it. But eventually you're going to get caught and the market's going to reverse and you're just going to buy something that maybe you'll lose your money on, but that's okay because no, I don't mean it in that way, but because as a trader, and if you're in there and you're cleaning house, I have to think. And so premium is paying right now. All right, back to the NASDAQ. So if I'm believing that we're in a larger uh, minute fifth wave, or excuse me, even a minor degree, the fifth wave is turning into a diagonal. The minute degree is also diagonaling because it's in the minor. And so now we're down to the minuette inside of the minute wave 5. We're in the minuette fifth wave, and that one I think is forming a diagonal triangle as well if we come down here. So we can see here. This one, it is. I can still work it out. 3, and then 1, 2, 3 is 1, 2, and again, this is where it gets really weird because you can come all the way down here and you get really hard pressed to try to figuring out, is that 3? Is it 5? What is it? What is it doing? And so it becomes very, very difficult. But I'm putting it on as a 1 and a 2. And then here we have this additional moonshot. But if I'm going to do a comparison to this, we come down and then we shoot up again. So we come down and then we shoot up again. Is what I'm looking for the pattern to repeat. And so I think we might have some really decent downside trading. We might kind of go sideways here, and then start to drop back down. So what do I want to look for? Well, I can do it several ways. I can put in for the entire move, or I can put in just from there, and we're just going to do fibs up, and it would just be a smaller pullback. And we're looking for maybe back down here, the 50, like 22,296 of all. Or is that not going to be enough and they start bringing it down? So I'm actually going to leave it up to this size. I'm not necessarily going to go all the way out because I'm going to take it that this is either A, B, and that's the C, and this is all a 3, or it's 1, 2, and this is a 3. And so, but we're still like here, ABC, and we came back down in ABC, and then we went back up and then ABC. It's very bizarre, but it just continues to climb. So here again, ABC, right? From that low, ABC, you can see it, ABC. Then we come down and what looks like a 5, which is just really bizarre, but it's an ABC. And then we start up. And this is it was pretty impulsive. So I'm looking for it to come in and then go back up again. And that's just taking it and comparing it to here. We went up, we went sideways, and we went up, and then we came down. We went up, we went sideways a little bit, and then we went up. And now we're going to do one of these, and then we go up again. Now, that takes us pretty much through a lot of this week, but here you can see here, come on, go back down. Let me get rid of that. Drives me nuts. So, and that's actually just the Zoom stuff. So here, if I'm looking, got the 3, and that was Tuesday to Wednesday. So a day and a half. finished, or day finished. And then this was Wednesday. Let's take Wednesday at the close. And this low was Thursday at the close. So this was a day, overnight and a day. And then this was Thursday close, and this was Friday's opening. And then we got that. And they just took it down. So it's presenting its challenges because of the Elliott itself, I got to tell you. So we do the best that we can. It still works, except I'm trying to balance it out. And it's like, well, if that shows up to me and it's going to end up being a 5, this drop, because on the hourly, it's like, well, wait a minute. There was that. And then it took an hour to get down there. That's it. An hour, a straight down drop. So it gets very interesting as to how it gets labeled, because when it does another moonshot and it's going up pretty much A, B, and we have a C, so this could be all of the 3, or it's the A wave of 3, and we get a B wave of 3, and then we do a C wave of 3. And again, it is just continuing. And so I have to include both sides. Both sides is like, well, we are pretty well overcooked to just overbought. So we should pull back. And even Tesla in its patterns, although right now they're bidding 471, even Tesla in its patterns, it gets up to a point and then suddenly the next day they drop it $30. And so they just, clean the clock and then they build it back up again. And that's pretty much that pattern. So that, along with Apple and maybe some other stocks all collectively going down, as money then shifts out again and gets moved somewhere else, that it provides us with that downside, and then we get the reverse to come back up. Okay, because it's just the way I think it happens tomorrow. And then Wednesday is Fed day. So a lot of things are up in the air in terms of like, what's the Fed going to do? What are they going to say? I don't think they're going to create a disaster, but I'm going to leave these up, and I'm going to do this a little bit differently because I've got to just put in what degree. So I'm going to put them in gold, which is that sub-minuette level. Come on. There you go. And 618, I'll leave it. I don't think I would want it. I don't think I want to see it down that far, but I got to leave a big enough window. And because if it is an A and B, and then we're going to go up again in a C wave, you can see we have, here's for 3, we have 22,253. We have 22. Let me just tell you what my windows are. The windows are 22,520 to, actually they're all kind of grouped together. So we're going to say 22,520 to 22,525. And then we have 22,620 to 22,654. And then we have 22,735 to 22,784, with a big upside level up here at 22,866. Could this get there? Well, did we think that the NASDAQ was going to rise 300 points today? It's like, no, not really, but it did. But it did. The cash market was up 316. So if it does it again tomorrow, we're up here. Or if we come down and then we put in a 3 or plus and then another 3 plus, we will be up into here. So I cannot rule this out for Friday. And again, I am kind of looking that that's probably going to be my best shot at where I think this 5th wave comes in. This minuette 5th wave comes in. And it's going to be attached to Friday's expiration. And then just the fallout from that massive amount of options that will be expiring, that we get the beginning of our next move down. Because don't forget that on its minuette wave 5, finishing minute wave 5, finishing minor wave 5, finishing intermediate wave 3. So I think we're very close. But it just is determination as to where. And so the best we have are the Fibonacci numbers. And so these correspond with the minuette fifth wave. I got 1.618. I can add more. Here's the 2.618 sitting up here at 23,482. I can put another one up there. If it's going to just keep going, we don't know. But we just do it. We just continue to add, right, as the 5 waves. But this, now you're going to see, this is gaining a lot of traction in terms of this 5th wave being a little bit big. But then again, when we pull it back out, so was wave 3. You know, wave 1, wave 3 is longer, wave 5 could be longer still. And it's normally, I have to tell you, normally it's not. So it kind of puts a lot of pressure on this diagonal, because see how far it's coming above that border, the boundary. And so I think the worst I can do is put this up a little bit. Not going to make a hell of a big difference, but you never know. No, it's pretty far up there. All right, so now we're opening up slightly higher due to the Tesla. We'll see what they want to do. But I'm thinking that we need to pull back. And it could be in the form of a B wave and part of this ABC for wave 3. And so in essence, or it could be a wave 4. 1, 2, 3, and this is a 4. Again, it's confusing, so I do the best we can. And it is still a finishing move, and I still think we're going to top out, and I still think we're going to come down in a little bit larger correction, and we're just going to try to get our timing together with the market. Again, to say this specific date or that specific date is, you're not going to get it out of me, because it's nonsense. Like, I know what all of these algorithms are going to do, and on that day, they're all going to put the top in, and boom, we're going to come in, and boom, we're going to go down. We're going to start that correction. No, I look for the signs. And so one of it, I will be on an hourly chart, I get 5 waves down, clean, 5 down, clean. That'll usually be the start of something bigger. All right, so here, downside, I think we have support at 22,354, 22,296, 22,249, and 22,202, and that could all just be an intervening B wave within an ABC to put in wave 3. So it's crazy, I know, either that or it's the weirdest wave 2, right? Because this is A, this is B, and we got a C. And we got to see. Here's the start of wave 1. So what you hear me talk about is wave 2 cannot go down and exceed the start of wave 1. And most certainly can go above an irregular above the finishing point of wave 1, because the C wave will bring it back down. Now, that it can be 1, A, B, C, 2, right? That 2 gets moved over. Or where 2's done and we finish, we come down into here, to here, possibly here. I don't necessarily want to see it because of the overlap, but diagonals, you get a lot of overlap. So that's possible. So I leave it open. And then, but still, I still think that we have upside left to do. But the market, it needs to pull back. And whether it does it or not up to us. But I think it would. Now, upside, again, we have a lot of different levels. 22,515 to 25, 620 to 655, 735 to 785, and then we have 866 up top. And we got a little bit of 2 on the same levels there. So that's the NASDAQ. If I go over just out to that daily, you know what? We take a look at these at our moving averages. You're going to see, look at that. Bing, 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 all heading up again. So it gets interesting. And if you thought that was interesting, wait to hear what I think about the S&P. This has been problematic, and that this does appear like it's a 5, but it looks like maybe A, B, and this is a C. So that's 3, and I was and still could label it 4, but then you got 3, A, B, C, 3, A, B, C, 3. So what are we getting here? That this is A, B, C, B, and we come down in a C wave. And it turns into a triangle. So this is an ABC, this is an ABC, this is an ABC, this is an ABC, and we're doing an E wave. And that's all minuette wave 4. It has been a strange where the NASDAQ is just hightailing in all the different directions. And the S&P is just kind of maintaining, not really breaking out, not really breaking down, just kind of sitting in, chop. But it's also, we can count it out, it could possibly be a little strange 4th wave triangle pattern. In which case we get a little E wave, maybe comes down to 640. I think I've got, let me see, let me get one last one. There we go. Yeah, 6139.75, 6140, 6135, 34, 6120. As if it really kind of came down here, but I wouldn't expect it. I think it's just on an E wave down in between 39 and 34, like in here. And then it springs. It springs back to life and just jumps. Now, we'll see what happens in between. But you run your fibs, and actually it's 382 to 50% are the most popular. But just because I want to show the pattern, right? And we are continuing to head lower a little bit here. So it still all could fit. In fact, this could be a little small AB, or a little bit 1, 2, 3, 4. We put a little 5 in, we do an ABC, and then we do another 5, and we get another ABC, and then that could be E, and then we launch. And then it should, because then we've got to get this 5th wave going. But that'll change the calculations. So all we want to really have left is that 6192, I'm going to call it, which is for the minute degree, the minute 5. And let me go out here and put it up and open it here. And it's, wow, minute wave 5. That's where it is. 618 is 62, or 6,192. And that actually, dang it, I keep thinking I put these right. Always missing, because there's so many. I had to recalculate. Let me go back out. I'm sorry. I keep thinking that I got this down. Yeah, I did. Activate, put this up here. Put this up here. I thought I went around and did all that. I'll put all the numbers. I'll straighten them out. I apologize, folks. But I really don't want to restart this whole recording, so we're going to go from there. So in any case, here we are. Now we got a little bit different. Got the 4, and that 618 is actually up at 62.66, not 61.99. That's with the roll. Again, March contract. So 62.66. And then we have this, which, because I was thinking that could have been the 4, and that this is 1, 2, and yeah, what's it doing? It is kind of just diagonaling. It's putting in a wedge. So I'm going to leave that out there as a possibility. Otherwise, it should not. It just is like difficult. But I think it could be that little triangle and we get come down here and not all the way down, but we come down like into here and then put the 4 in and then we go. And then I'll make this adjustment. So this 4 would come over to wherever it finished. And then we get a set of different levels for this minuette fifth wave. So right now, I still think the fourth is still in progress. I've left that there as sort of markers in case the market does something really kind of silly, that we have something to show. And then the adjustment is made on this. So both actually, I think, remain within the finishing process of this larger rally, which began, right? This intermediate third wave rally, which began in October of 2022. That's what I think we're getting up there to finish, and it's the intermediate third wave. Its finishing portion has been wacky, has been crazy, has been difficult. And there are a lot of seasoned Elliottians. And we talk, and a lot of them are like, well, I'm just kind of trading it. I'm like, yeah, I get it. And so am I. Which it is providing tremendous opportunities across the board. Tremendous. But pure Elliott does still work. But you've really got to look at it, and you really got to drag it around, and you really have to take it apart and look at all the possibilities, all of them, whether you like the possibility or you don't like the possibility. You got to look at it and keep an open mind. So I still believe we have additional upside before this is all done. NASDAQ proved that today. The S&P did not go to new highs. So, we're waiting there. I think it should catch on. So maybe it's not done with its minuette fourth wave. Whereas in the NASDAQ, I believe it is. So a little bit of divergence between the two markets, but I think they all catch up. And who knows, again, once we get this thing going in a rally phase again, what actually becomes of it. All right, tomorrow on the economic calendar, we have U.S. retail sales, industrial production and capacity utilization, and the home builders index. And then Wednesday, of course, is FOMC interest rate decision, along with Chairman Powell's press conference. And so housing starts come out early and building permits come out early on Wednesday. So that's what the market's going to be really focused on. And we will see how this all pans out. Next update will be on Tuesday, December the 17th.